Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder of LikeFolio. Andy, thanks for being here today.
Yeah, happy Friday.
All right, so sports betting, it's been taken off. The NFL playoffs were awesome. I think more and more people are adopting this as states open up their gambling. But if you look at the stocks within this particular space, whether it's DraftKings or Penn Gaming, they've been taken to the woodshed. They're big losers in their stock prices over the last year. Do you guys have positive data on these companies? Because I know they're investing a lot to continue to grow and eventually be profitable, but they've been taking it on the chin this year.
Yeah, I'd say for DraftKings, there's a relatively positive story in that, the company's benefiting from a real macro trend that you just alluded to, and that is a lot more people are getting involved in sports betting as it legalizes. I think we've doubled the number of people that are betting on sports, up to 12% of the population versus 5% just a couple of years ago. So that's pretty strong. And, from a sports betting perspective, LikeFolio sees that increasing 25% year over year, and DraftKings actually outperforming that, up 52% year over year in terms of the number of people talking about opening an account with DraftKings, downloading the app, that kind of thing. So we see DraftKings outperforming a positive macro trend, which we really like. And so as we move forward, we think DraftKings is in a position to outperform all of its peers at this point. Now, the stock is beaten down considerably, as you mentioned, but at LikeFolio, a lot of times those are our favorite types of setups, and that is when a stock is down, but the underlying consumer demand metrics, along with those macro metrics, are on the rise. A lot of times those are our biggest long-term outperformers, and DraftKings certainly has an opportunity to fall into that kind of positive divergence category moving forward. And then on the other hand, Penn, not so much. So if I had to pick between the two right now, definitely would be going with DraftKings. I think they've got a better growth story going.
Andy, you guys have identified, your data identifies DraftKings as the best in show of these groups. I have two little topics for you. Number one, is it fantasy sports or is it sports betting that's going to carry these companies to profitability, or do they have to have both? And number two, what does DraftKings do that the others don't, or are they just executing better? And is there too much competition here for these? Do there need to be less players, or is competition an overall problem in this group, Andy?
Yeah, I actually do think competition is a problem in this group. It's pretty cutthroat. They have to offer huge bonuses to get people in. As for your first question, I think it does help DraftKings versus competitors that they have that fantasy football, fantasy sports element that can, kind of be the first taste for people into their ecosystem and then get them hooked on the actual real money betting. But, I think that DraftKings is at least outperforming everybody else, but there's also on the other side of the coin, you could make the argument, and I think you kind of are alluding to this, is that this could just be an overall bloodbath of too much competition, having to spend way too much money to acquire these customers. So we see DraftKings picking up market share, growing really well, but the question is, how much are they having to spend to achieve that growth? And that's something we just can't tell you. But from a market share perspective, we see DraftKings definitely leading the pack.
Yeah, and I think they were one of the first ones before it was actually legalized, where they focused more on the fantasy sports side of it. Yep. So they had a good base to start with. But Andy, when you look at this as a whole, like the NFL playoffs, big boost for these online mobile betting sites. And now we've got March Madness that's about to start up, when my Purdue Boilermakers are going to probably take the NCAA crown. But is this
you had to go there, didn't you?
I did. If you look at this, the cyclical side of it, where it's based on what sport is hot at that point, and you get more betting probably on football than you do on baseball, of course. But is that part of what your data is going to be reflective of? That hey, this is cyclical. There's 4 or 5 different series throughout a year where the data points start to grow even more and more.
Yeah, absolutely. I think we always look at these companies. We try to look at them on a year-over-year basis for that reason, because what's hot at the moment, it can alter things dramatically if you're only looking quarter over quarter or month over month. So March Madness will be a big boom. We'll really be watching which of these companies gets the most mentions of app downloads or depositing money during March Madness, just like we do around Super Bowl and around the beginning of the football season. I think those are kind of the 3 peak times for these companies. And, March Madness coming up is going to be a very, very big deal. The one thing I will caution people on is that even with DraftKings, Penn, all of these companies have relatively low consumer happiness ratings. There's outages. People also just don't like losing money. And so there's not a lot of reason for us to believe that brand loyalty is going to be a really big factor in this. So if DraftKings is spending tons of money to acquire these users and pump those growth numbers up, there's really nothing that we're seeing in our data that says they'll stick around, all the way through the next Super Bowl. People kind of jump around to whoever's offering the best bonus at the moment, which is an expensive proposition in this highly competitive industry.
Yeah, there is so much to talk about with these companies, Andy. I mean, I think you just touched on a key topic going forward. Is this going to be one of those situations where everyone runs to it's like the video game industry, right? Everyone runs to the popular place, and then this place gives a better deal, and everyone runs to that, and it's just a race to the bottom in these companies. And then at the end of the day, you probably leave unhappy, because if you ask most people that bet, well, I won, and then I lost everything, and then I ended up losing and I lost. So that's kind of the way these things end up. So how do these people make a positive, a positive day for these people, a positive experience, and still win money from those people?
Yeah, it's tough, especially if you're DraftKings, primarily only an online presence. I think, Penn, for all the troubles that it has right now, the relationship with Barstool Sports is likely quite a positive, because they've got that content machine behind it that's very entertaining. They've got, physical locations that people can go to. And generally speaking, people are less likely to be upset about, losing money at an entertainment venue when they know they were going to have a good time, rather than just looking at their phone and watching money dwindle away. So that's the argument for Penn long term, especially as states open up gambling across the United States. So it's really competitive field. I would say, in summary, LikeFolio sees DraftKings is doing a really good job of grabbing market share right now, but it's a tough industry, and they could all walk away with a lot of bruises before it's all over. But if we had to pick one right now, it would be DraftKings.
Yeah, and DraftKings had earnings about 3 weeks ago, Andy. So based on your data, you're pretty positive on it, even though the stock's down over 70% from those all-time highs last March. So with it here, you guys have positive sentiment data on it. Do you guys have a score even though it's not earnings?
Yeah, pretty positive. And I would say that really it's not even though the stock is down 70%, we're bullish on it. It's because the stock is down 70% and we're seeing this growth. So now we can start to get pretty bullish on this company going forward. That big discount in the stock price probably was overdue, and now looks like it could be a divergence opportunity, which is one of the things LikeFolio loves to discover.
All right, great stuff as always, Andy. Thanks for bringing us the data. Have a great weekend.
Thanks, you too.
All right, that's Andy Swan, the co-founder of LikeFolio.com.